En digital marketing, vous allez dire qu'est-ce que je fais, professeur de marketing à la bourse. J'étudie les marchés, market comes from marketing, et c'est les investisseurs, les institutions, les régulateurs et leur comportement vis-à-vis des technologies financières et surtout liés au Web3, les crypto-tokens ou crypto-actifs, c'est la même chose d'ailleurs, les dApps, Decentralized Application et la technologie blockchain. Je vais aujourd'hui vous présenter une combinaison de deux de mes derniers articles scientifiques qui sont liés à la notion de la confiance, trust, qui sont déjà publiés. Un qui est plus théorique, où je développe un modèle de confiance on top de la blockchain décentralisée, et un autre qui est plus empirique, mais plus qualitatif, où j'ai fait des entrevues approfondies avec des experts dans l'industrie du Web3 et la blockchain, le DeFi, pour voir pour eux comment ils choisissent les cryptoactifs, quels sont les facteurs, the drivers and the trainers to the adoption of crypto assets. Et based on that, I built a model that I will show it to you, and that will be a model to build the trust based on blockchain trustless technology. So I'm gonna switch in English. Voilà, c'est commencé. As you might know, blockchain is the narrative about blockchain is trust-free, trust minimizing, no need to trust any one technology. You trust the code, trust the math, trust the you trust the system without intermediaries. In this presentation conference, based on the research, you will see that trust is still needed, and trustless innovation or technology is only theoretical, because I will show you how the vulnerabilities and risk and interdependency of blockchain technology is what makes the need for trust to establish. So I will be building a trust layer for end users and institution on top of this trust minimizing technology that is blockchain. So what will be it's a framework of trust towards crypto tokens, where we will be balancing challenges and end user perception of value. I will go a little bit just to remind the evolution of the web from Web 1 to Web 3. Where are we now in Web 3? What we are trying to do with DeFi integrated to Web 3. The blockchain ecosystem vulnerabilities at different layers of the stack of blockchain. A glimpse of trust across disciplines to see that from socio-technical perspective, socio-psychological perspective, trust is still needed. Integrative framework of trust, the trust layer that I'm going to present it to you, and then the consumer perspective about this, how can we build trust toward crypto assets and to increase adoption, and finalize about a typology of crypto tokens or crypto assets and their unique characteristics with final remarks. It's important to know that I will be using crypto assets and crypto tokens interchangeably into this conference. I mean the same thing. There is an evolution of the web from Web 1 that was static, open web, of course, and to Web 2 that is more centralized. Okay, it's more the web of reading, writing, and creating. We can write, we can read, we can interact, be directional. However, everything is controlled by the platform who offers these intermediaries. And the premises comes with the ethos of Web 3 to bring back the decentralization of Web 1, but with the user experience of Web 2. Like, we're gonna open the web again, we're gonna bring the notion of ownership with the content that we create. So we have a web of read, write, and own, according to Chris Dixon. It's a web that will allow ownership, web of the ownership, and through tokens and tokenization. So it's built on the concept of decentralization, openness, and greater user utility. And Web3 is not only about tokenization, because it's a new business model departure. So through token economy, we can try to see what will be the new structure of the new business model of any decentralized application that will happen. Currently, we pay for subscription to content, we pay for internet connection, we do e-commerce transaction. We will continue to be doing that. But what is broken right now, and what is with DeFi and decentralized application, new business model might change, is that the consumer data that is free flow for platform now will be the ownership of the end user. This is the premises. Now we'll see how much it's happening or not happening. The labor and user-generated content that is free from platforms, the concentrated governance and ownership now into the platform, the algorithmic blindly driven efficiency and scale, the switching costs that are extremely high. You cannot take your LinkedIn network with you to another platform. You cannot create your content on Instagram, on Facebook. You don't own them, the platform owns them. And the value in this case is not divided equally with those who created it. So Web3 new business models are planning that we're gonna remove this broken business model and try to replace it thanks to the tokens and with the ownership notion with a new business model that we're going to divide the value equally between those who created and the platform. So here comes the notion of crypto tokens or crypto assets. A bit of definition, like there's a lot of definitions in the literature, but definitely it can be anything representing value. It can be a token. Anything with value can be a token. So a token is a representation of something of value. It creates a structure around value, enabling to be represented in an economic systems in exchange for other tokens. So that's why first things when we propose decentralized application with a token and related to them, we need to think what is the UVP, what is the unique value proposition that we are providing with this token. That's why a lot of tokens, we have thousands and thousands of tokens, most of them have no value because they're not associated with a unique value proposition. How to capture it, what it gives to the market, and how it will stimulate the market demand, and how it's gonna achieve market product fit is very important. Even the IMF defined crypto assets digital representation of value. So the notion is the value. And now, of course, there's different tokens. What the function of value will be, we will see towards the end of the presentation, because there's different type of value. And from marketing perspective, it's multidimensional construct. It's not only price construct. So that's why tokens can have several functions. They can be used to transfer value between business partners. They can incentivize to use a specific service, to contribute to the open source code base in Bitcoin, rewarding behavior. They can ICO finance project. So there is different type of tokens that needs to be classified according to their values, according to the challenges, and consequently to the regulatory framework, because they cannot be treated similarly. Bitcoin cannot be treated the same way as Trump coin. Like, what is the value of Trump coin compared to Bitcoin? So Bitcoin cannot be treated like stable coins. Stable coins cannot be treated like arcade coins. Arcade coins cannot be treated like non-fungible tokens, like collectible tokens. Meme coins cannot be treated like company-based tokens, like all this decentralized application. So the value challenge should be defined by we need a classification of this type of tokens, and consequently better trust requirement, better challenges solving problems, and better value definition. So that's what, and all these tokens, however, are based on the lovely technology of blockchain that is defined by, that is positioned as a trust machine since 2015 by the economists, that it's possible to trust the outcome of a system without trusting any intermediary within it. That Nakamoto concludes its white paper by stating, we propose a system for electronic transactions without relying on trust. And it's whereby a professor at Pennsylvania State University positioned it as trust-free technology, and others confidence system thanks to its technical architecture. However, dramatic events in the blockchain ecosystem, not the technology maybe per se, although we will see also the technology, have shown like this recent ones, but all the time there is dramatic event in the blockchain ecosystem, whether from Terra Luna collapse, the Celsius freeze and Ponzi scheme, whether the FTX mismanagement, whether the Ledger Connect security breach, whether Prisma Finance also security breach, whether February 2025 Libra CryptoGate that pump and dump token. So there is all the time something negative happening in the blockchain ecosystem, making the negative use cases more visible and the positive and valuable use cases hidden because of what is happening in the media. So that's why critical questions can emerge. Is blockchain needed indeed a trustless system? Is trust no longer required? Or does it take a different form and different meaning across different disciplines? And here we find that why it's defined as trustless technologies, that trust is under-theorized and it's poorly defined across the literature, specifically when we link it to this innovation of crypto assets and blockchain technology. So from socio-technical perspective, we need to build a trust layer, and we need to close the border between the closed technical system that is, that mentions that it's trustless technology, and the end user and the markets and the institution and the regulator. So we need to build this, overcome this trust frontier and build a trust layer on top of this trustless technology. So quickly, I will go just, there is different in the literature, they define the different stack of layers of blockchain. But if we simplify it for everyone to understand, because we say if one on the blockchain doesn't have a problem of, its problem is communication and education about it. So in the middle is the ledger, the network, the consensus layer, the platform layer, if we want to talk about it. The next layers are smart contract, the software, the code. Then you have all the service provider outside, the peers, and you have the decentralized application represented by the tokens, the crypto assets. So each layer of this stack has shown, and each actor has shown technical and non-technical vulnerabilities and weaknesses. So that's why we put in this paper, we position that a trustless or trust-free system is only theoretical, and trust can take different meanings that I will show you right now quickly across discipline. But before I go to trust across discipline, these are examples that I identified with my co-author in relation to at each layer, the vulnerabilities, the risks, the weaknesses, technical and non-technical ones, like Sibyl attacks leading to false consensus, hard fork, network node centralization, DDoS, decrease in mining network power, validators miner collusion, centralized governance, the DAO, decentralized autonomous organization, that are positions that everybody can vote. Governance token, we can vote. A lot of new research are showing that are far from decentralized, and the token the governance token is only for those who understand the technical part and not everyone who holds the token. So at smart contract code vulnerability resulting in hacks, at a vulnerability of the dApps, pump and dump schemes, ICO scams, project failures, centralized interfaces, sandwich attacks, flash loan attacks. Some are very technical, and at service providers and peers, humans, reputation governance of crypto exchange platforms, crypto fraud, illegal assets, lack of internal control, poor management, unclear regulation. I'm sorry, I'm disappointing you maybe with this, but there are risks and vulnerability happening at each layer. Just to say that trust is still needed. Of course, the technical part is solved by layer 2, scalability, zero knowledge proof for privacy. So the community is building, the mind in the community at technical level are working hard to improve each of these technical problems, but still centralization, and even decentralization centralizations are not like dichotomies. They are really a spectrum of a continuum of the level of centralization, the level of decentralization. So hence, based on that, there is a need to implement this layer of trust. Why? Because what is trust according to discipline? Of course, I'm not going in details into that, but from socio-technical perspective, in psychology, trust is different than in IS, it's different than in sociology, it's different than in economics. For instance, in psychology, it's peer-to-peer trust. It's interpersonal. It's a personal trait. It's an attitude. It's a belief or behavior depending on the authors. So it's not eliminated like it's positioned in the literature in the blockchain context. Trust is still present, but it manifests itself differently in peer-to-peer. So I still have a peer. I still have to trust the validator. I still have to trust the other Bitcoin holder I'm gonna exchange with them. I still have to trust the institution, the centralized crypto exchange. I still have to trust. So there's a lot of humans are still in the loop in the blockchain, contrary to what is said. Sociology, institution-based trust is like the trust is needed when there are favorable contexts that allowing to trust. So its behavior as situationally constructed, so which means we will trust the situation and we will trust the structure. In the blockchain context, to trust the structure, we need the regulatory framework, we need the legal, governmental, organizational, technical infrastructure and environment that is what induce trust and support success of a decentralized application. In economics, trust is more cost-benefit analysis, calculus trust, calculative trust, which means what is the cost, what is the benefit. So I will be the trade-off between this to be able to assess if I will trust, I'll do the transaction or I will not do it. And this is mainly important at the beginning of a relationship where when we want to promote a decentralized application, a new token, we need to focus on cost-benefit analysis. In information system, trust is more toward IT artifact and algorithm. So how much this technology will perform what the designer of the technology is promising to be to it. So in human-computer interaction, the dimension of trusting belief goes between performance, processes, purposes that explain trust toward automated artifact. So based on this, we build a layer of trust that combine this perspective of different disciplines, where we get inspiration with my co-author from trust toward e-commerce application. When trust toward at the beginning of e-commerce in the 90s, when people wanted to put their cart online and buy, so there was a need to build a trust layer for e-commerce and to encourage people to. So inspired from McKnight work and in e-commerce, the early days of e-commerce, we built a layer of trust that could be a little bit theoretical, but I will show you after how practical will be. So what does it say is that this is a trust layer that is multidimensional, multi-object, and it follows a process from initial trust to knowledge-based trust. So this trust to trust in the blockchain ecosystem, we need to trust three objects: the platform, the blockchain, the infrastructure. We need to trust the decentralized application, the product, the service that is offered, and we need to trust the peers and service provider. So there is a human side and there is two technology side. That's why it's a combination between algorithmic trust and blockchain and its application, and trust toward the actors. At the beginning of the relationship of trust building mechanism, economic-based trust, cost-benefit analysis, calculus-based trust, institutions are more prominent than the other, than trust towards the technology. So if the environment is favorable, if I know I can protect the consumer, if the regulations are clear, I can protect from bad developers, from bad ideas, this environment will increase trust toward the DApp. Cost-benefit analysis, calculus trust, how much the benefits of this decentralized application outweigh the cost of this decentralized application are very important at the initial trust, to build the initial trust toward that app. The more we move, and we build the initial trust, and we start experiencing the technology, the application, knowledge-based trust take more prominent role. And here we focus less on what the regulation, what is the environment, and we focus more on the trusting belief toward each application technology and the peer of it, which will bring the trust toward this system, and consequently what we want, the behavior, adoption, risk-taking, information sharing, cooperation, which by themselves, when we adopt and we learn about this decentralized application, will reduce our perception of this risk and increase our disposition to trust, and the loop will happen. Tangibly, no, because this is theoretical at this level, you might say, well, tangibly, so we have to build trust towards three entities. Trust toward human-like construct, miners, validators, developers, peers. Trust towards the system, the blockchain, protocol, smart contract, oracles, and trust towards the decentralized application per se. The protocol of the use case, the product, or the service. And each one will be operationalized through different way. So, for instance, I will be testing the benevolence, integrity, competence of the different humans inside this ecosystem, where I'll be going to measure the helpfulness, the reliability, the capability of blockchain platform, and the performance process and purpose of the technology layer, which is more in the product and service. To be able to go more and to show you how this happened, I want to interview how much this will apply or not apply to 41 experts in the blockchain sphere, between startup founders, crypto token holders, traders, investors across multiple sectors, which were mainly male respondent. It's an industry skewed, unfortunately, until now toward male, with average experience in the industry 6 years, and all possess deep blockchain knowledge. And through analysis of their interview and the content, through theory-driven analysis, GEO's model of analysis, first order, second order, and the unit of analysis was the decentralized app, where how would you build trust toward decentralized app? How do you build strategy to increase end user trust toward decentralized app? I came up with 4 categories. One is related to the investor characteristics, which related to more technical knowledge and education, perceived value and benefits, perceived risk and disposition to trust. So what people have been mentioning, if we aggregate them, that what are the benefits if I want to use a crypto tokens or decentralized app? Lower fees, borderless transaction, fraud reduction, instant payment, transparency, financial inclusion, return on investment higher, and so on. Those who have limited knowledge, their trust level was lower. So a younger generation, however, who has more interest and into this space, more knowledge user, we're finding crypto tokens more trustworthy than older ones. Perceived risk varied between technological issues, regulatory uncertainty, anonymity concerns, fraud, scams, volatility, rug pulls create barriers, and disposition to trust was psychological dimension that differ between each one of us. Some have higher level to trust from the beginning compared to others. Another characteristic were related to the decentralized application characteristic. So what is the UVP of this decentralized app? What is offering? What is its economic model? How it's distinctive from what is already in the market? What is the sustainable benefit with it? What problem does it solve? Also, what is the white paper? What is the which type of blockchain? What is the viability of this decentralized applications through time? What is the novelty and originality? How much is simple for the end user to use it or not to use it? What are the founder credentials? Who are the investors? Who are the venture capitalists behind it? What is the background of this? All these are factors that have been mentioned that are drivers for success of decentralized application and to build the trust toward decentralized application. So if you're any crypto token, you are building a decentralized application based on blockchain, definitely this dimension should be considered because they increase trust perception from the end user. Also, the macro environmental factors have been: what is the regulatory framework? What is the IT readiness in the market? How much they are benefiting from the information communication technology? What is the financial literacy in the market? And mainly, what is the acceptance by institution, which is a network effect? If these are present, this will increase the level of trust toward this decentralized application. And blockchain technology per se behind the infrastructure, the technical complexity, the scalability, the cyber security, anonymity, privacy, and disintermediation, decentralization also have been mentioned different times by the interviewee, that they play a role, and double-edged role, because some people want disintermediation, decentralization, while others were mentioning this will be hindering trust if there is no intermediary. And that's why we're seeing Kraken, Coinbase, all these companies are succeeding because they're playing the role of trust in this relationship between peer-to-peer. So based on that, this is the integrative model of trust from the investor perspective that can be used. So to increase adoption of crypto token, we need to build trust. And to build trust in crypto tokens, we need to consider all these dimensions, that some of them are, they hinder trust, and others of them develop trust. So any decentralized application, any crypto token that need to be introduced to a market need to consider these four categories of some of them related to the individuals, others to the decentralized application design per se, others to the environment, others to the blockchain technology behind it. Of course, this exploratory in a sense, now I'm going further with it, we need to test it. Which dimension have higher weight into the adoption and trust compared to another dimension? Which factor is more important, and so on. But this was what mentioned from the 41 interview, semi-structured interview with experts in this industry. So based on these two papers analysis, if we want to bring more practical solution to overcome the trust issues in the industry, at the three-layer of the blockchain ecosystem that I described previously, definitely there are some more practical ones that can be used, like add escrow service, reviews, reputation-based mechanism, similar to e-commerce platform, testing and auditing of the protocol, smart contract, reward the developers who identify code bugs, security measure guarantees should be offered by the platform, continue to solve interoperability, scalability, which is would happen with the merge layer 2 and so on. At the depth, design better user interaction and user experience, as most decentralized applications are not user-friendly, are complicated for Mr. and Mrs. everyone. Test the decentralized application for bugs, provide reputational feedback mechanism to increase trust, and continue to collaborate for peers with regulators to set up standards to ensure that every exchange and wallet provider adheres to a general set of security benchmark. So that's definitely in general. But this will, from the consumer, from this investor, when we've been talking and asking how have you been mitigating this risk coming from different layers, and there is risk assessment, risk aversion, we classify them, and risk diversification. So the investor perspective was that we go and check the open source consultation. We check the white paper, like I said, the team, who are they behind the project, what is the financial statement. We check undergoing product trial. We work with small assets before we go further. We review the code reviews for those who have more technical background, some of them soliciting the community advice before going further. Risk aversion also, they trust the market leader in the DeFi applications or any type of decentralized application. Those who have higher network base, they follow the news, the community, they store in hard wallets, an option centralized application, and they try to manage psychologically the greed, the impulsivity, the FOMO that comes with it. And risk diversification also, that was mentioned, they disperse their asset across different projects to be able to minimize the risk that comes with not trusting these technologies, these innovations. Of course, this will depend on this was a general toward decentralized application, but tokens are not all decentralized application, and different classification happens, and mainly there are 7 categories that I end up with them of tokens that should be treated differently between network tokens like Bitcoin, Ethereum, Solana, Uniswap. They have their own network, and the value for end users, that the price of the network, more people join the network, the value will accrue for all the participants, the protocol participation. Security tokens are different and are treated as security for regulatory compliance, and they grant defined rights like equity bonds. Company-backed tokens are these tokens deriving value from off-chain, like we've seen it with FTX. This is company-backed token, FTT. So it's more centralized control risk happens, regulatory scrutiny toward these type of tokens, potential value manipulation toward this type of tokens, and there is opaque governance toward these tokens. There are ARCA tokens also, another category of ARCA tokens, more utility tokens in this type. They are more closed system, like you have let's say airlines with Air France. So these are type of ARCA tokens in the blockchain. You have a loyalty program. So it's a closed system. It's a more provide for the end user convenient currencies inside the application, rewards, and can have low speculative risk. Their price can change, this token. However, it's because of macroeconomic conditions, not because they are speculative assets. We have also the last three type of tokens, collectible tokens that we've seen with definitely the non-fungible mainly, in-game assets in the metaverse, profile pictures, NFTs, all these represent ownership of unique digital assets, are mainly non-fungible. They provide ownership, and however, they are very speculative, they are very volatile. They have problems with copyright, IP issues. They can be investment, but not investment. Asset-backed tokens, here where we are talking about stable coins, whether they are backed by the US dollar, the euro, or by crypto. These are payment the methods that can be, they have their, they can be treated by regulation in a different way. May fall under securities and commodities laws. There is collateral risk. However, the value for end user is the stability, liquidity, on-chain access to financial instrument, predictable value because it's stable. Even the stable coins by themselves are different categories, like stable coins with fiat currency collateral, with no collateral, with cryptocurrency collateral, and each one of them differ. And we have the meme coins like the Trump coin, the Millennia coin, the Pepe coin, the Shiba Inu coin, that are tokens with no intrinsic utility other than the hype and the internet culture, and speculative by nature, and extremely based on hype on social media brings the value of the price. We have another paper coming that shows clearly the more people talk about it, the higher the price and the bidding on marketplaces. So the extreme volatility, manipulation risk, but it's entertaining, community belonging value. It's type of value, community belonging, and potential for high reward, and at the same time high risk for the user. So this taxonomy reveals that token design, regulatory positioning, and value create the different trust dynamics. So we cannot go same, although my framework was general, but can be adjusted to the type of tokens that we want to talk about. And also we cannot treat all these type of tokens with the same regulatory lenses, so we cannot go with speculative meme coins similar as Bitcoin and Ether and Solana, the chains that are there. What is interesting that there is, however, one interesting paper by Commoners, who's a professor of entrepreneurship at Harvard, and built token startups, and he said that whatever regulation should happen, it should has 5 criteria. If you want to really create an environment that is innovation proactive for crypto business models, so that we have predictability and stability, clear enforceable rules that encourage innovation by developers and adoption by consumers, protection of property rights, that's very important, legal recognition of digital ownership, and securing ownership boost trust. Transparency and information clarity. Efficient markets depend on reliable information. So buyers need to understand what they are purchasing, what type of asset is this. It is DeFi product, it's an NFT like the classification I showed, and fair competition to prevent monopolistic practices and market manipulation and fraud and fostering innovation. But the future is promising because we have more and more active crypto users, and that some project that will be billions in the coming of users of crypto, in 1 billion in the future, near future. Transaction volume, according to World Economic Forum, volume in stable coins for some already exceeded some fiat currencies, and regulation is becoming clearer, like Genius Act in United States for stable coins, to issue a stable coin, and financial institutions are responding to this pressure, and the technology is maturing, although it has a lot of challenges, vulnerabilities, but everything is under the way to be matured. Thank you, everyone. Voilà, that's it.
Thank you, Lisa. Very clear. We can switch now in French, I guess. You can also accept some questions also in French. On peut tranquillement faire la discussion en français. Est-ce qu'il y a des questions? Et je vous demande juste d'utiliser le micro.
Bonjour, une petite question toute simple. Est-ce que ces slides seront disponibles?
Si vous voulez, avec plaisir, bien sûr.
On va faire de telle façon que ce soit disponible. On va vous dire où. Question, curiosité?
Je pense que vous l'avez trouvé trop théorique. Je me demandais comment faire la théorie en pratique. Allez-y.
En fait, sur le développement, sur la stabilité, il y a eu à un moment un grand désir des banques centrales d'écraser cette idée. J'ai l'impression qu'ils reviennent maintenant, qu'ils sont plus... Et ce qu'on voit, c'est beaucoup plus un désir de la part des grosses institutions financières de prendre le train, au contraire de mettre tout sur blockchain. J'ai vu que le dernier truc, c'était la Bank of Bonnie Mellon, qui est un des gros clearers d'assets qui a mis je ne sais plus combien, enfin qui a comme projet, qui a annoncé qu'elle mettait toutes ces transactions. Donc comment est-ce que vous voyez justement l'institutionnalisation quelque part de tout ce système qui pour l'instant est assez, je dirais, anarchique dans le sens non contrôlé par les États?
Très belle question. Je pense qu'il y a eu avant Trump et après Trump, il y a eu vraiment un comme inflection point. Et la pression ou l'ouverture à cette industrie par l'administration Trump a aussi mis la pression à travers le monde de s'ouvrir à cette industrie-là. Depuis toujours, la blockchain, surtout la blockchain privée, la permissioned blockchain, était, comme XRP et tout ça, était l'intérêt des institutions financières. Mais maintenant, on voit de plus en plus, comme vous dites, aussi permissionless blockchain, où les entreprises sont intéressées à voir le public blockchain où elles se dirigent. Je pense que, parce que les régulations sont de plus en plus claires, on a MiCA ici en Europe pour toutes les cryptos, je pense la pression américaine qui prend tous les talents et les startups based aux États-Unis ou même en Amérique latine, comme le Salvador, où la Bitcoin est plus store of value et currency. Comme s'il y a une pression qu'il faut vraiment s'ouvrir. Et la technologie, elle est en train de se maturer au niveau technique, ce qui aussi facilite les choses aux entreprises de se lancer. Je ne sais pas si quelqu'un aimerait ajouter à ce que...
J'ai juste un commentaire avant la prochaine question. Du moment que tu as parlé de Trump, dollar Trump, j'étais curieux. En fait, je suis allé sur Solana, et il n'y a pas de code source disponible. Donc, il y a un white paper de 40 pages qu'il a suivi en fait la promotion de ces crypto-monnaies. Et finalement, c'est bizarre parce que là, on parle de confiance, alors que pour investir sur le dollar Trump, c'est justement la confiance à Trump.
Tout
Pas
à
au
fait.
système, pas au code, pas à la source. Donc la question de la confiance, c'est vraiment un peu une shield.
C'est pour cela cette typologie que j'ai présentée, elle est importante en sens que meme coin, c'est quoi? C'est-à-dire, what is the inherent value? C'est quoi la valeur derrière le token? Dans le cas de Trump coin, tu as tout à fait raison, c'est Trump. C'est Trump qui est, c'est-à-dire, la valeur, c'est d'aller manger de McDonald's avec Trump dans la Maison Blanche. C'était ça l'invitation à la fin pour ceux qui avaient des grands tokens, holders, et la spéculation. Alors, dans ce point-là, c'est pour cela la distinction de trust devrait être faite. What is the value? C'est le modèle que j'ai développé. What is a decentralized application, a decentralized token? Comme dans le cas de Trump, le meme coin is providing to the end user. Et dans ce cas-là, pour certaines personnes, la spéculation, bien sûr, faire de l'argent vite fait, et d'autres, c'est être parmi la communauté de Trump. As simple as that. Yes, and the last question maybe, because we have the second speaker here.
Merci beaucoup
Avec
de votre
plaisir.
présentation. J'ai une question. Alors, je ne sais pas si vous avez la réponse, mais peut-être que vous savez s'il y a des travaux sur le sujet. On peut avoir deux stablecoins en PEG dollar, mettons qu'une soit négociée en Turquie et une autre soit négociée ailleurs, pour des raisons pour couvrir donc le risque inflationniste du pays ou des choses comme ça. Et du coup, finalement, une s'appelle A et l'autre s'appelle B, et normalement, elles devraient avoir la même valeur. Voilà, ce n'est sans doute pas le cas. Est-ce qu'il y a des études qui portent sur ça? Parce que justement, là, on a une mesure, entre guillemets, je ne sais pas si elle est relative ou totale du trust, enfin de la confiance. Est-ce qu'il y a des études là-dessus? Est-ce que vous pouvez nous parler de ça?
Mais c'est intéressant ce que vous dites, parce que la semaine passée, j'écoutais une conférence, et stable coins are far from being stable. De point de vue économétrique, la conférence, c'était un économiste qui l'a présentée, et il montre... Bien sûr, et il montrait clairement que crypto-based stablecoin ou même dollar-based ou fiat currency pegged stablecoins, il varie on a hour and a minute and a daily basis leur valeur. C'est pour cela peut-être que vous dites qu'il y aura une différence dans la valeur et dans l'adoption d'un comparé à l'autre. Bien sûr, confiance. Et contexte macroéconomique, parce que bien sûr, ça se montrait clairement, les économies où les utilisateurs ne font pas confiance à leur système monétaire, sont plus confiance à l'alternative, stablecoins. Comme l'exemple de la Turquie que vous avez donné, comparé à d'autres stablecoins. Avec plaisir.
Merci Elissa.
Merci.
On t'a épuisé.
Non, pas du tout. Merci.
Merci encore. Ok, donc c'est le moment du deuxième speaker, Misko Mazur, de SK, qui va décliner le même concept, mais dans un environnement plutôt centralisé Bitcoin. Also, this talk will be delivered in English, I guess, no? Yes. Okay. If I could. Or in Italian, it's up to you.
On this very topic. So I'm going to present an overview of the new changes in the environment around Bitcoin, and one of them would be strategic Bitcoin reserve, and the other one the role of institutional investors in the Bitcoin environment. So this is the current market context. Okay, so we have Bitcoin, gold, and equities at all-time highs. Today, silver hit an all-time high. Is it a good thing or a bad thing? So if you're invested in these assets, obviously it's a good thing. If you are not invested, it's a very bad thing, right? So there is a lot of information behind these different price levels, different index levels. Most of it's bad about the state of the economies currency debasement. Okay, so there is a new trend, new trade, which is called anti-debasement trade. That is why a lot of institutions and a lot of investors invest in Bitcoin, gold, equities, silver, and other assets. So for the last 12 months, or 18 months, there has been this unprecedented flow of positive news related to Bitcoin and other cryptocurrencies. So we never experienced in the history of Bitcoin, so since the inception, so 16 years ago, we've never seen so much positive news about Bitcoin and crypto. So everything what we envision about Bitcoin, so becoming a strategic reserve asset, institutions getting involved in Bitcoin. So all these postulates that were formulated at the very beginning, they are coming true right now. So this shift in attitude was prompted by the new administration, new U.S. administration, which is pro-innovation and pro-crypto. The other administrations, so the alternative was at the beginning was sort of indifferent, but towards the end was clearly anti-crypto. Okay, so there were many lawsuits issued by the Securities and Exchange Commission, Department of Justice. Many people went to jail for simply running crypto startups. This positive attitude and the change in the attitude in the US obviously spills over to other countries. Okay, so China suddenly becomes pro-crypto. India as well. Okay, Vietnam enacts new crypto laws. So U.S. in these policies affects other countries as well. Europe is still resisting. Okay, so we have, as usual, we have the new regulation, but it's a bit. It stands a little bit on the sidelines, okay, as usual, and as in many respects, okay. So it's beyond dispute at this point that crypto has become mainstream, okay. So there's like no newspaper and no day that can pass without any news about crypto, and there is no way back. So there is no way back to the stage where crypto be considered illegal or unregulated, and so it's a fact that crypto has become one of the new asset classes. Okay, so these are the collection of shocks that affect the crypto markets, and not only crypto markets over the last 18 months. So we had a very important approval of a spot Bitcoin ETF in January 24. Then we have Bitcoin halving in April 2024, which I point as a negative event because it has a short-term negative price impact on Bitcoin. It's also a negative existential event from the perspective of Bitcoin. So there may be some halving in the future that Bitcoin may not survive, right? So that's a critical event. Then we have German government selling that further decrease the prices. And then we have pro-crypto U.S. administration. Okay, so we have euphoria in the markets starting October, November. Then tariffs, the Liberation Day, which basically reversed the euphoria. Okay, so we have like a 3 months of sorrow. Okay, and then we have Bitcoin Strategic Reserve in March, and then Genius Act and a number of new pro-crypto legislation. A little bit about Bitcoin and nation states, or Bitcoin as strategic reserve. So it started not long ago, although the idea about Bitcoin strategic reserve was circulating for quite a while. Okay, so I remember when I first started reading about crypto in 2017, there was this idea was already mentioned. So strategic reserve and also the institutional involvement in crypto. There is this tiny state of Bhutan, which has a population of 800,000, GDP per capita of $4,000, which is relatively poor country. And this country has currently Bitcoin holdings of approximately $800 million, which constitute 25% of its GDP. So they mine Bitcoin from ample hydropower, and they basically generate green Bitcoins. And they put these Bitcoins on the balance sheet, and they use these Bitcoins to pay for certain governmental expenditures like salaries of civil servants and so on. They never bought any Bitcoin. Okay, so they bought miners, or maybe they didn't even buy miners, but maybe they rented them out and they just mine Bitcoins in order to use them actively in their in government spending. So 25% of GDP is like having almost $1 trillion in here in France. Okay, that would be the rough equivalent, hypothetical, of course. Then another country, El Salvador, a very different policy, similar holdings in terms of value. Okay, also around $800 million. Relatively poor country, but not in Asia, but in South America, known for crime, violence, corruption. There was a change in leadership, and then decided to use Bitcoin as a legal tender. Okay, so alongside US dollar, in El Salvador, you can use Bitcoin as money. Again, you can pay daily for whatever you want. And on top of that, the government started buying Bitcoin and started mining Bitcoin. So they keep buying Bitcoin in the open market, and they mine Bitcoin using volcanic energy. So again, green Bitcoins. And they keep buying these Bitcoins for the strategic reserve, and they pledge they will never ever sell them. Okay, so very different approach of these two countries. El Salvador had huge problem with monetary, what is it called? With the World Bank and EFM, yeah, because of what they did. However, they didn't have an alternative really. So IMF tried to help them for many years, and they couldn't lift them out of the poverty. So they went this way along against IMF, and also the pressure coming from the United States. And the previous administration, this administration had a completely different view on this strategy. Then we have executive order signed by Trump in March this year, establishing of Bitcoin strategic reserve and digital asset stockpile. However, this is just the very first step. Okay, so executive order doesn't mean that suddenly United States will start buying Bitcoin, because there is actually no legal framework yet. So there is new bill being prepared by two senators. One of them is Cynthia Lummis from Wyoming, and she was very pro crypto. And this bill is going to be voted in January 2026. So in the next few months, and then we'll see where it will lead us. But this is like the very first step in the direction of establishing the strategic reserve. And actually, I'm gonna now show you that it's actually quite far from reaching the objective. Okay, why would you like to have this strategic reserve? Well, you could solve your problems, right? So assuming that the price of Bitcoin could continue going up, you could actually pay back the debt, or at least a portion of the debt, which is actually a big problem, not only in France but many other countries. What about strategic Bitcoin? So this idea of strategic Bitcoin reserve was followed up by U.S. states in almost all 50 states in the United States. So the orange states, orange states are those that had at some point active bill that was meant to create a strategic Bitcoin reserve, and the black states are the states that never had any active bill that was related to the reserve. Okay, so for example, California was not interested in forming strategic Bitcoin reserve alongside, I don't know, Nevada and Idaho and other states. Okay, but we had plenty of these orange states that were actually bringing the idea to the table. Most of the states failed, actually. So there is two states actually that. So this is a very nice website if you want to check it out, BitcoinLaws.io, that tracks the entire process at a very detailed level. And then you see that these orange lines. So only three states succeeded so far, and Arizona actually did not really fully succeed, because in Arizona the law states that the state is not allowed to sell the Bitcoins or other cryptocurrencies that have been seized, okay? But only New Hampshire and only Texas actually establish Bitcoin strategic reserve. Other states are like at the very beginning of the process, like Massachusetts, Michigan, Ohio, and the rest of the states have failed. So yeah, in New Hampshire, like establishes 5% limit. Okay, so 5% limit of a certain type of spending can be channeled into the strategic Bitcoin reserve. So it's a little bit surprising that so many states failed. It's a bit also surprising that many states do not care. However, all these states, many more states, continue to develop other types of legislation related to crypto, like digital asset bills and so on and so forth, not related to the strategic reserve. Recently, I don't know whether you heard this interview, but the Treasury Secretary Besant said that United States are not going to buy Bitcoin. Okay, and he said it in one day, and then he had to go back to the TV the next day and actually kind of corrected that, maybe we'll buy Bitcoin, but later. Okay, but what he said is that United States from that moment on will not sell Bitcoin. Okay, so all the Bitcoins that have been seized by the country are going to be kept on the balance sheet and it's never going to be sold. But he actually didn't confirm and actually leak the information that United States is at this point is not considering seriously buying any Bitcoins. Okay, so that was a little bit of a surprise and disappointment. But I think that's basically the current state of affairs. As I already mentioned, there is a new act called Bitcoin Act. It's going to be voted in January. Has 2 sponsors, and maybe something's going to change in the near future. But then at this point in time, there is no follow up on this strategy. Other countries remain in the wait and see mode, and I think it's a great opportunity for investors. It's a great opportunity for other countries to invest in Bitcoin at this point because the more divergent opinions we have, the better, and actually it matters who is the first and second and so on. A little bit about institutional investors. So the gateway for institutional investors to own any Bitcoin is the ETF. So the spot Bitcoin ETF was approved by SEC in January 2024. Gensler, who was the secretary the chairman of the SEC, didn't have a choice, and actually was forced to approve these spot Bitcoin ETFs by the federal judge. Okay, and then he approved 10 ETFs because he wanted to induce competition between the ETFs and actually spark the competition in terms of fees. So the fees went down. There was another ETF which is called BTC Mini, and BTC Mini was a spin-off from GBTC. I'm going to explain later, and it took place in August 2024, and it's actually the cheapest ETF of all of them. So we have 11 spot Bitcoin ETFs. Now, when we look at statistics, the IBIT, which is the ticker for BlackRock, so BlackRock ETF is the fastest growing ETF in the history of the ETFs. So going back like 35 years. Okay, so over this 35 years, IBIT grew fastest. Okay, so that's basically the trajectory of the IBIT growth. So it took only 1 year to reach $80 billion. And for example, when you look at VU, which is a very popular S&P 500 ETF by Vanguard, it took like 5 years to reach the same level, and then for other ETFs even longer. Okay, so it's super fast growing, and then it generates the highest amount of fees for BlackRock right now among all ETFs. Okay, so it generates close to $250 million per year in fees. Okay, and so it's the most profitable, the fastest growing ETF out there. So net value for all the Bitcoins held in ETF, in these 11 ETFs in today's prices is $165 billion. There is only 2,000 distinct institutions invested in these ETFs, and each institution owns on average 2 ETFs, okay, for some reason. So they prefer to diversify for, I mean, it's not really clear to me why, but they prefer to hold 2. Okay, and I'm gonna present you some slides, and this data, the data they use is as of the second quarter of 2025, which is the most recent quarter for which the data is available. So this is the list of all spot ETFs. The fees, I think the median fee is around 2.5 or 0.5 or 0.25. There is this one super expensive ETF, which is GBTC. Okay, it costs 1.5%, and there's another one which is the cheapest one, which is a spin-off of the GBTC, which is called Bitcoin Mini, and it costs 0.15%. But the fees are relatively low. Okay, so if you invest in ETFs, you probably notice that the fees are not elevated. So this is the number of different institutions that have been investing in these ETFs. So at the beginning it was 1,000. So everybody was euphoric. Oh wow, 1,000. Okay, at the very beginning, so end of March 2024. This number somehow stabilized, and then when we had a change in the administration, was pro-crypto, pro-innovation, then this number went up by another 1,000 approximately. So now we have 2,100 distinct institutions, okay, invested in these ETFs. By the value of holdings, so the picture varies, okay. So we had a continuous increase here. In here we see that in the first quarter of 2025 we saw that the value of holdings depressed. So all these numbers are in today's dollars. So the value of holdings depressed most likely because of the tariffs and the investor community was expecting recessions. There is also almost 1/3 of all these institutions are hedge funds by the value of the investments. And therefore, the hedge funds are very, as you know, they are unregulated. They are super flexible. They conduct numerous strategies, and they use these ETFs for other strategies. And most likely, these were the hedge funds that were selling ETF in the first quarter. But that's a bit surprising, to be honest. Secondly, this is the number of institutions that invest, or different unique institutions that invest in a specific ETF. So as you know, that IBIT is number one, and then there's GBTC, surprisingly high because it charges very high fee, and then we have Fidelity, and then we have a Bitcoin Mini, and basically that's it. So we have like top four, and then we have like five ETFs that are relatively unimportant. When you look at the value, IBIT is by far number one. 22 billion, and then there is Fidelity with approximately $5 billion, and then others. So when you look at the total holdings of these ETFs, which is $165 billion, and then you know that institutions hold 34 billion, then you know that when we know that institutions hold 20% of the Bitcoin holdings, right? So the rest belongs to the retail investors. Which is actually I find very important. So this chart represents investment decisions by the ETFs already invested, of the institutions already invested in the ETFs. So on the condition that you are already invested in ETFs, what kind of decision are you going to make? Are you going to keep buying or selling? So as we see, there's some selling on the left, but most of the institutions buy. And what is interesting is that the institutions that buy, they usually buy these small ETFs, small relatively unimportant ETFs. So probably some relatively small institutions that experiment with Bitcoin ETFs, and they continue buying over time. We don't observe this as the same effect for IBIT or FBTC. When you look at the owner type by incidence, so traditional investment managers, 75% of all. This is by number. Family offices, I think that's 16%. That's quite a lot. Again, by number. Okay, hedge funds only 5. Then banks 3, 4, and then a few insurance companies, 2 pension funds. Okay, some VCs, not a lot. When you look at the value, the picture is slightly different. So traditional investment managers, 19-20, and then hedge funds quite a lot, 11 billion. Okay, so only 5%, but $11 billion, and then we have family offices, not a lot. Okay, around $1 billion, even though in terms of the number, they're like 15% of all the institutions involved in these investments. So we only have 2 pension funds. I think it's an interesting example. We have a state of Wisconsin that bought IBIT and GBTC, and we have Michigan Department of Treasury that bought ARC. State of Wisconsin sold during the first quarter of 2025. They kept 320 million in these ETFs, and they liquidated their position completely. Michigan still holds its 10 or $11 million in ARC-B, but there's basically one pension fund invested in Bitcoin right now. Portfolio turnovers, as we can see, most of the institutions invest in long term. Okay, so they don't churn assets very frequently. So yeah, it's approximately 5% of them have a relatively high turnover, and most of them are growth and aggressive growth. Holdings by authorized participants. As you can see, so I was really so as you know, authorized participants participate or take part in this ETF architecture, and they are authorized to redeem and to create units of the ETF. Okay, so they play a very special role, but they can also do anything else with the ETF units if they want. So they can run any other strategies that they desire. As you can see, they are invested very differently in the ETF. For example, Jane Street has a huge position at $2.5 billion. Okay, and others like Cantor Fitzgerald, JP Morgan, Macquarie, about 200 million, which is not a small position, but it's not as big as Jane Street, and then Virtue is even smaller. So to conclude, there have been some policy reference by the new U.S. administration that have eased restriction on Bitcoin holdings by institutions and sovereign entities. But despite this huge optimism, the U.S. Bitcoin Reserve is, for now, built only from confiscated Bitcoin. Okay, so we didn't see U.S. government or U.S. states in the U.S. buying Bitcoin, and probably they will not purchase Bitcoin anytime soon. This creates an opportunity for other nation states to create their own Bitcoin reserves before everyone else. But this move requires obviously a lot of courage, perseverance, and money. On the other hand, institutional investors accumulate Bitcoin, so they keep accumulating Bitcoin at a significant pace. We see significant increase both in the number of new institutions that keep buying this asset and the value of holdings. And there is roughly 160,000, 180,000, depending on who calculates, institutional investors around the world. And we expect that many of them are likely to engage with Bitcoin in the coming years. Okay, so there is I would say a huge upside in this opportunity upside in this space. Thank you so much.
Thank you very much for this very nice overview, institutional overview. Just a small comment before letting people ask questions. I never heard about China here, who is a big owner of US debt. What do you think about the future evolution of China in this market?
In ETF?
Yeah, for example.
Yeah, so China, so as we are probably noted, so China is looking at the United States and try to either react or copy, because U.S. is a big adversary of China, and China is a big adversary of the U.S. That's basically the perception of these countries have of each other. So I think one of the seminars, someone who knows China and is Chinese told me that, at this Securities and Exchange Commission in Shanghai, they are looking at all the new regulation coming from the United States and analyze it thoroughly, and if they think that it's useful, they will apply it in China, which is quite something, because they have completely different legal tradition, right? So they do not come neither from the civil law nor common law, but they find a way to apply these laws in their jurisdictions. When it comes to ETFs, so China reacted by allowing, I think, 4 or 5 ETFs to be traded in Hong Kong. So once they saw the U.S. allowed for the spot Bitcoin ETF, they allowed 4 or 5 of these ETFs to be traded in Hong Kong now. So Hong Kong, as you know, if you're living in China, mainland China, and you're a bit wealthy and a bit intelligent, you will find a way to invest in Hong Kong. Another thing is very important is that we have been having tokenization for quite a while, for several months now, and for the first time in history, Chinese individuals are allowed to buy American stocks, tokenized stocks, through different trusts. So China's policy really depends on what United States is doing, and so if the US is pro-crypto, they will try to be pro-crypto within certain limits, but they would be definitely pro-crypto. So if US will be leaning towards being anti-crypto, like Biden's administration 2021. So remember when Musk stopped accepting Bitcoin for Teslas in May 2021, the Chinese decided that they're going to ban trading and owning crypto and mining crypto, because U.S. administration was leaning against crypto startups. So to answer your question shortly, so we obviously China is opening up to cryptocurrencies simply because United States is opening up to cryptocurrencies.
Makes sense. Any question, comments, some remarks? Everything was even too clear for everybody.
I don't think so.
It's also time for the cocktail.
Okay.
So I would like to thank all the speakers today. Thank you very much once again.
Thank you.